Hello and welcome to the Just Cover podcast. We're doing something different today. We've got special episodes coming this year on key areas of financial planning and the importance and value that advisors can help customers with. My name's Wayne.
And I'm Hazel. And today we've got a divorce special where we're really lucky to be joined by Fiona from Intelligent Pensions and Manjit from the Mortgage Mum. So we're really looking forward to speaking to these two professionals and their take on what people should consider when it comes to getting divorced. So if we start with yourself, Fiona, what is your journey into the area of financial advice that you're in?
I worked for 20 years odd with two major providers. And when I was working in the technical team at Scott, because it was then, they asked me if I would collaborate on a pensions and divorce report with CFA. And that kicked it off. And then you start reading about some of the cases and it's incredibly interesting. So I stuck with that for a while, and I did a lot of training with solicitors and with IFAs. When I joined my current firm, I didn't do it for a while, so I'm just getting back into it. But very interesting.
Nice. Yeah, I had similar when I was a mortgage advisor. That's where I really saw the impact of divorce as people coming in to see me to get the mortgage side sorted. So, Manjit, is that more in your area, or tell us a bit about your journey as well?
Yes, so thanks for having me on the podcast today. So I'm Manjit, the mortgage mum. So I'm a mortgage broker and I specialise in over 55 mortgages. So my journey started actually with Halifax Bank, which is obviously Lloyds Banking Group now. Been there over 20 years in financial services now. So all the financial education I've had over the years, I can now take that where I'm now with the Mortgage Mum. So I joined Mortgage Mum last year. So this is 2022 now. So the year's flown. And we introduced the later life lending division in 2023. So I'm proud to say it was a brilliant year for the Mortgage Mum. Not because it was a turbulent year. We know interest rates were going quite high. But what I did find was it was a point where I was able to educate and mentor a lot of other mortgage brokers, especially within the Mortgage Mum and outside, and having the skills of working in a bank and learning all the skills of giving mentoring. I could develop that and within the team, and really good year. And I ended up having and being highly commended newcomer for later life lending. So thank you. So from that, it's about educating so many people, especially during divorce, and having those skills that I've learned over the years to help other advisors.
Excellent. And then similar to us, myself and Hazel both come from this bank assurance background.
Yeah.
If you like, you mentioned Halifax, I've worked for them. So how important was that coming through that journey that you had in order to build up the experience you've got and then help others?
So I was lucky enough to be a business manager and bank manager. So I was able to use those skills to then reflect that on my client's journey. So having that tailored approach, I find that when you are seeing a client face to face, it's completely different when you are seeing them on Teams and Zoom. But the same type of skills that you use from your experiences of working in a bank, seeing clients face to face, it's just making sure that clients, everything you do is in the heart of the client's journey. And just making sure that they are taken care of from the start of when you see them to the end of their journey.
And there's been a real uptake, isn't there, in terms of home finance and that later life lending type piece over the last few years, has it not?
That's right, yeah. So again, it's all about educating my clients that there is always a solution, especially when they are going through divorce. There is an option when you are over 55. And a lot of people aren't aware of the solution of having a mortgage at a later life. So having that financial education, I think, is so important to educate more and more people. And that's what we do is we spend a lot of time online, on social media, to try and promote the aspects of all the lenders we work with.
I think the importance and the value that you place is just shown already. And one of our other episodes we've done earlier this year, where we've talked about the importance of the advisor and the value. So looking at what you do as well, Fiona, I noticed that you've in the past, we've spoken before, where you've done seminars maybe and talked to lots of different individuals about the importance of retirement, the importance of planning properly, and also in the areas of divorce and stuff. You've signposted financial advice. So how has that gone for you throughout the years in terms of your journey?
Well, I, as I say, I spent several years delivering seminars to mixed groups of solicitors, telling them about pensions, and IFAs, advisors, telling them about the legal process. So I was sort of the interpreter, if you like, between the two. And now I'm working for a financial advice firm. So now I'm seeing the actual clients and their real problems and what they're concerned about. But I must say that I also, just purely in the interest of research, I got divorced twice as well. So that helped.
In first-hand experience in the situation.
Yes, that's all I was after.
Yeah. So we found when we did some research at Legal in General, only about 7% of people over the age of 50 actually consult with a financial advisor when it comes to divorce. So in both of your opinions, Fiona, I'll come to you first. Why do you think that is, but how do you think a financial advisor could improve the outcome if people did start to approach them earlier or during that journey?
I think the obvious reason is cost. Financial advice does come at cost, and with the amount of research that we have to do, it looks like significant cost. What we try to do is to educate people on the difference it could make to them. Now, it's fair to say that the vast majority of divorces, especially with younger people, you probably don't need much more than basically being able to sit down and discuss what each party has got. But when you're talking about people who are in their 50s and older, and the divorce rates in that demographic are still going up. Everybody else is going down, they're going up. But at that point, it's you can make a real difference to the finances, partly because you've got assets that are worth spending time on, and partly because you have clients who are likely to really need some form of income support going forwards. So it's really being able to give examples that it depends on the circumstance. And I try and encourage financial advisors when I was trying to say, have a look at the case first and see if you can make a difference. And quite honestly, maybe there are, 7 or 8 out of 10, you're not going to make a lot of difference other than maybe advising what to do with the pension at the end of the day. But those other cases, you can really make a massive difference. If it's if one of the parties has got a public sector scheme, you can apply for different valuations, and depending on the circumstances, you can get nearly double the initial value that came out. So it's worth doing.
It's definitely, she wouldn't mind, my auntie's actually going through a divorce at the moment as well. And it's interesting, that's been the sticking point, is their pensions. Because she was the stay-at-home mum for a period of time. They've both got businesses that they've since built up. Yeah. My uncle's business is more valuable, but only because she was with the kids for a sec. So it's that pension piece that's actually been the sticking point for them. So and that is what's now costing them money in the legal side. So it's interesting what you...
It's very... so costing is a big issue, but one of the things I try and do, if you're interested in this area, is, keep half an eye on the Daily Mail, because things are happening. And you've got stories about a certain footballer at this point in time who's having a few problems with his other half. And they pointed out that, they've only been married 2 years, but they've been together a lot longer. And equally, he's the one that's earned all the money, whereas she's been looking after the children. But it's been pointed out, and it's absolutely correct. She's still entitled to her fair share. The courts absolutely give the same value to what they call the homemaker to the breadwinner. But a lot of breadwinners don't like that. They don't think it's fair, but it absolutely is. You're working as a family unit.
It's a really stressful time, isn't it, for everyone involved? And I'm just interested to think about and sort of dive into really when you speak to a client and you talk to them about what they could do and that enlightenment moment in terms of what they might be entitled to or the angle you could go down. How does that make you feel that you can actually add that value? That must be a great position to be in. That person didn't know, did they?
Yes. Obviously, it's one of the best things ever when you can actually tell somebody they're in a better position than they thought they were. I think you refer to it. I mean, we still know, although it's the law for pensions to be taken into consideration, something like 80% of women still report that they're not asked about it. suspect, to be honest, that they maybe have been asked and it's not very interesting and they've forgotten it. But there's more than there should be. When we talk to them and say, have you talked about the pension? Oh, no, should I have done? I thought that was his. Yes. Sorry, I'm
like you don't know what you don't know.
Yeah,
and exactly. It's tricky. And it's definitely because we see that in headlines all the time, don't we, that women struggle more than men when it comes to pensions and building that pension pot as well. But when it comes to the divorce, what do you, Manjit, think? What do you do to support the females through that if you are seeing those female clients at that stage?
For myself, I find, a lot of people do go online and read information online. They think actually that's enough information they receive. When they speak to mortgage brokers like ourselves, we can actually provide a tailored approach, tailored advice based on their needs. So everyone's circumstance is unique. So the single person having their finances reviewed, their circumstance will be different to somebody else. Like you said, it's about potentially they may have a pension which you're not aware about. So we try and ensure that we look at their savings, their assets, their pensions, look at their new affordability as a single person taking on a new mortgage. So in terms of the situation when you are taking on the debt by yourself, unfortunately, we do have to sometimes deliver bad news, and it's not always, yes, you can take over that mortgage. And having those professionals around you, so like you said, in terms of having the right professionals who can give you the professional knowledge, sometimes you don't have the knowledge to go out and make that right advice. So having a mortgage broker who can assess your affordability, having financial advisors who can tell you about your pension, because we can actually use future pensions for mortgage affordability. So again, is having that knowledge, and then working with family law solicitors as well is very important to know what your rights are. And yeah, we can't give advice. We always have to refer them to a family law solicitor and say, well, actually, are you entitled to X, Y, and Z? And then we can work with the client. There's 3 stages. You've got your divorce conversation would have. And then there is the post-divorce once you have got the agreements from court and the income we can use. So, yeah, so it's definitely emotional time for clients. So we try and make sure that we can emotionally support them as well, because we find that they will unfortunately not know the directions they can visit. So, yeah, having the right connections and being able to refer them to the right professionals, I think it's very key at this time.
And it's interesting what you say about people going on Facebook, looking online at things. I'm part of a Facebook. I don't actually have Facebook personally. I just use it for Marketplace. But there is one of the groups that I'm in. It's amazing. It's an Edinburgh community group. But it is amazing how many women actually post on there. I'm thinking of getting divorced. What do I do? And you get all these opinions from all these unqualified people then getting added in. And actually, as you said, having those professional connections probably takes a lot of stress out of that time, and time out of the process as well, because you've got that professional. So obviously we've said divorce is stressful. Definitely women might struggle with the pension side slightly more than male counterparts. But what do you think advice brings? Why do you think advice is so important? And what does that elevate in terms of that process?
Oh, as an advisor, you can certainly help with the technical side, but I would also say very much the practical side. When it comes to pensions, the very first thing we will say is you need to find all of your partner's pensions. And I will say at this point, we're assuming, generally speaking, the male partner is the one who's got more in the way of assets, but it does work both ways. So I'll just get that one out of the way. But when you've got a lady in her 50s and 60s and she's getting divorced and he's perhaps looked after the finances all their married life, she doesn't know where to start and she doesn't know how long it's going to take. So what we will do is say, okay, right, start as soon as possible, because it takes some pension companies a very long time to produce the information you're going to need. And I think for anybody who's not involved in our industry, there's no reason why they should know that it really does take a very long time.
Online logins and all of that. It must be a minefield.
You've got all of that, but you've got to get permission to go and speak to the trustees, and then you're waiting for the trustees to come back. Different, particularly your final salary schemes and the privately administered ones, it can take a long time. So the first thing is that just start as soon as possible. And the other little tip that I'll just share what I use is women don't necessarily know what, if you say to them, what pension has your husband got? Well, I don't know. But if you ask them, okay, who has he worked for? They're more likely to actually know that. And then when you've got the employers, you can then sort of say, it gives you a place to start to sort of say, oh, right, there might have been a pension with that employer. Let's ask.
Yeah, it's a lot of investigating, isn't it?
Yeah.
Taking the time and trying to be patient, I guess, with it until you get the facts. Because I think definitely what we found from the research on, I think it's only 20% of people actually discuss the value of their pensions. Yes. So it's no surprise that when they then come to that divorce, kind of that stage of divorce, actually years have passed and that's something they've never spoken about. Think how many employers they might have worked for over that time. I bet that, the time, as you said, it doesn't surprise me that must take a huge amount, out of their time if they're not seeking that advice, or as they probably don't even know about it in the first place.
But I mean, also, if you've ever tried to trace one of your own older pensions,
it's not a few years ago. I'm not that, I've obviously not been working that long. And it took, I think, 7 months. I even got the pension tracing company that I used actually came back and said, we can't find one. And I definitely know I've got it somewhere. So eventually we got to the bottom of it. But it was about 7 or 8 months it's taken me.
There you go. I'm glad you said that. So that is not an unusual experience. I've had the same with mine and I know what I'm talking about. So, for somebody who's just coming into an area of finance that they know nothing about. So prepare.
We've spoken a lot about the pension there, but property is another asset, isn't it, that a lot of couples have. And I think, what would you say tends to be the biggest stumbling block or hurdles for them at that point?
As you know, January is the biggest time of the year. We have our inbox, which is full of people saying, "What property? What do I do? Can I take it over? Can I have it in my own name?" Unfortunately, it is a time, this time of the year when Christmas, they've decided it's time to have a new beginning, whereas potentially the property could be mortgage-free. So how later life lending can help is actually releasing equity to pay the ex-partner off. And we have had that recently where, as you're probably aware, divorce is very expensive and costly. So raising that money to cover costs of the divorce, those can be actually ways to raise capital. And it is another way of releasing equity if you haven't, like I said, if you haven't invested in a pension, have invested in savings, and you've thought, actually, I'm just going to be home mom, looking after the kids, never thought this situation would happen. Well, actually, we can use the equity to cover costly divorce situations. And
do you find many people that's brand new to them, something that they didn't have a clue about until how do they come across that option, do you find?
Yeah, 100%. I had a client just recently, she's 70. She was emotionally involved. It was actually not her divorce, it's her daughter's divorce. She approached me saying, I want to help and support my daughter. She's going through a costly divorce. She has one child. They're going to be living together. What can I do? I've only got 30,000 and I want to move close to my daughter because the cost of post-divorce is so expensive. So childcare cost. She hasn't got any other savings. So we managed to, at a later age of 70, help her buy a property, release equity, and do a equity release mortgage to allow her to buy a property next door to her daughter. So it is life-changing for some people to be able to support their family in such a situation which she potentially not even thought this was possible.
Life-changing is the key, isn't it? And we're talking about consumer duty here now, aren't we? Where that's with us and ongoing. The difference you can make to their lives is unbelievable, really. So when a lot of clients come to you, I'm interested in, Manjit, what sort of state are they in? Is it, for example, now, in the new year, a couple of months in and all of that, have they made decisions they're ready to go, or are they quite sort of vulnerable, fragile, that type of thing in terms of mentally? 90% made the decision or not? How are they feeling when they come to you?
It is a very emotional time for a lot of our clients, and this is where, as advisors, we take a tailored approach and support them emotionally through this process. And that is the key as an advisor. We need to make sure we look after the client and give them that flexibility of time. And as you say, mental health, it does impact. It has a big toll on mental, what we then say is potentially we actually help them, refer them to GPs. So a lot of advisors don't do that, and it's key because I can only support them with the finding out their affordability, how much they can afford, what planning for the future, their budget. However, I cannot help with them. So I can only help at a certain amount, whereas a GP then can do that a little bit extra for
But you're signposting to an expert, aren't you?
Yes.
And that is the true value of advice, the true value of a professional that does that in terms of the way you've done it with your seminars before, and now you're advising, you're signposting to experts in different areas.
Yeah, and the other area is making sure that when you are speaking to clients, children are involved. And we always say, have the conversation when children are gone to bed. When they're gone to bed, that means that not only you are stressed and have financial stress on the mind, children hear it. Try and have the conversation when children have gone to bed or they're at school, because it emotionally impacts not the client but children as well. So we always say keep that awareness about your client and understand their needs to just really support them through an emotional time.
Really quickly realising here is, although your role is specialist in pensions and helping people with that, your role is specialist in kind of equity release and helping with that, it is so much more. It's, as you said, that practical support, those added extras. And I guess you probably end up being like an agony aunt sometimes to your clients throughout those processes. And that I'm sure that makes such a difference to them, even if you can't personally help, having those places that they can go, which I said they probably didn't know about before your conversation with them. And I think that's, as you said, a really rewarding and empowering feeling, that must be.
And actually, one of the frustrations that we get as financial advisors is that very often, by the time the client actually talks to us about it, the deal has been done. So they come to a financial advisor because they have a pension share or a financial situation, and they said, right, now it's all been done now, sort me out. And actually, one of the things really like to do would be to encourage people to come. We talk about the 3 stages. Come before the divorce and help us help you to get the right settlement. Pensions are very tricky things to value. And even if all you're going to do is offset the value of your pension against the value of the house, you want the right value for that pension, and then you get more of a share of the house. People, I think a lot of people don't realise that we can help there too.
It's interesting. My background was a state agency when I very first left school, and usually we'd be the first people that they'd come to.
Yes.
Like they'd walk into the estate agency, we're looking to get divorced, how much money do we have? And you wouldn't necessarily think, actually, it should really be an actual advisor first to work out the full range of assets and support. And I think for any advisors listening to this, because there'll be lots of advisors tuning in, to the special, I guess maybe that's something to all take away. If you've got somebody coming to you for a mortgage, or if you've got somebody maybe you are attached to an estate agency, actually have they got that full range of financial support available? Because I hadn't actually even realised it'd be far too late by that point.
In our case, it very often is too late. Not too late. We can still add value, obviously, because we're going to help with what they do with their assets going forwards, but we could have done more. So it is quite good. That with the caveat that, as I say, there are a number of divorces, probably the majority, where the assets are actually fairly equal anyway. So in those cases, it's fine. But where the assets are significantly unequal, then that's where you really want to be talking to a financial advisor to try and get a fair settlement.
Now, how many advisors, just right, my sort of intuition really, how many are coming into the industry in the sort of thing that you're doing in the pensions and the divorce side of things at the moment? Because we know there's a gap in advisors coming in general, but specialising in the way that you do.
Yeah, I don't know how many they are, but what I do know is that it's very small.
Yeah.
So obviously you need to have the right qualifications, and then also be able to liaise with solicitors and understand the legal process. So while I imagine that lots of advisors will be able to help once we've been through it, there's the pension, do something with it. I think there are very few that actually specialise in helping people through the divorce process.
So in terms of professional connections, people passing customers to you, how important is that for you, and how do you develop that? How do you cultivate that?
Oh, that is exceedingly important. Right. We're talking about professional connections with solicitors, but also really importantly, actuaries, because you do, for some cases, you need to get even, go in more depth than a financial advisor would go into in terms of getting the actual valuation. You might need several different types of valuation. You could be valuing a future income stream, or you could be looking at capital value. The courts ask for different things. So yes, it is really good to build up connections and know that you have people that you can go and talk to, that you can rely on going forwards.
And Manjit, for yourself, how about people coming into the later life lending side of things? How's that happening at the moment? How's that working?
My first year of attending Air Sourcing, who is the sourcing club that we go under, and going to the award ceremony when I got highly commended, it was interesting. The comedian on the stage said, this room is full of 90% men. So it was interesting to see the demographics of later life lending is mainly men. So it's refreshing for us as women in mortgages, of the mortgage mum.
Refreshing.
Yeah, to be able to offer.
You're doing it, aren't you?
Yeah,
got the name as well, so it's great.
Yeah, so it's nice that, and this is where I think the brand, the mortgage mum, does attract more women to giving them support. And I guess we can have that empathy with the clients a little bit more with women to be able to support them through the process. So yeah, but we're here to support and emotionally support throughout the whole process during this tough time.
I suppose a lot of that involves mentoring with new people into the organisation as well. Yeah,
that's correct. Yeah, so making sure anybody who's joining the firm is aware of the process of dealing with later life lending clients. Especially unique to us is we ensure that we invite family to the conversation. So it's really important when a client is seen by us, we will make sure they have friends if they don't have close family involved, because it's so important to make that decision with somebody else present. So we always welcome family to join Teams call, Zooms call, because it's an open conversation. Having the open conversation with the family, I'm taking out a lifetime mortgage, what are your thoughts? So getting everybody involved, we find it so important. And yeah, we're open to the conversation.
And it's an area that people don't know about, do they? So if you're involving the family, you're gaining the trust from the individual, but from their family at the same time. So they're more likely to, because they're involved in the process, to be brought into it, aren't they?
100%. Yeah, it allows them to ask questions on the outset, not 10 years down the line where, what is this paperwork? What have I signed up to and agreed to? So again, not only gaining the commitment from the client, but from the family. So they're all fully aware and they are bought in and they understand the small print, and make sure it's jargon free and keeping it simple.
And that's the importance, isn't it, of being an advisor, about to take these technical things, explain them in simple language so customers understand. And so when customers, when that light bulb moment's going in terms of the options and what they can actually do, what's that like when that comes along?
So we find a lot of clients are actually quite surprised because they have walked into a high street bank and been refused potentially. So having that option, it's a breath of fresh air that actually there is an opportunity to still get a mortgage at a later age.
Yeah. And in terms of that time process, say for example, I'm a financial advisor, I'm seeing a couple and they're getting divorced, and then I'm listening to this podcast, I think actually equity release might have been an option for them. What would you ask them to look at or send through to you in terms of a referral? And then how long can they expect that to take for their client, would you say?
So we work closely with other mortgage advisors, and as part of consumer duty, we make sure we provide a holistic advice to give them all the options. So because we are mortgage brokers, we also can look at high street banks and do a comparison, and we will always pass it back to the advisor if we feel we can't help. So giving them all the information. The process itself for later life lending is quite quick. We've seen within 4 weeks mortgages completing. They tend to be slightly different in terms of funding. So the funding is directly with the fund managers. So it's a much quicker process from when you do see the client to completion. However, we try and make sure that the client is fully aware throughout the process, as we are Equity Release Council under there, and a lot of our lenders are as well part of the Equity Release Council. We just make sure that they are fully informed and have got solicitors involved as part of their conveyancing solicitors, and they do home visits to clients' properties as well, just to make sure and sense check that they are happy with the process. So yeah, it can be as quick as 4 weeks, or again, it can be delayed. Some people will initially have the conversation and come back 6 months later. So it's about just making sure it's not a quick process, but giving time and clients to reflect on the decision they're making before they go ahead.
It's a huge decision, isn't it? So I had a scenario where some friends were looking at a similar thing, and they're still mulling it over 6-8 months down the line. They still actually haven't made a decision because it's such a big decision, and there's so many resultant impacts on other areas of their lives. So yeah, I totally understand, and you have to help them along. Don't you? Make sure they understand everything. If they don't, be there for them and offer that service to also help them where they need to get to.
Yeah, I used to be, so my background's in mortgages. I did equity release for a while, and when I was recruiting my teams into equity release, I used to always look for patience. Because if it was the advisors that were expecting that customer, like first-time buyers, make a decision straight away, like they need everything done immediately, get that, they want the mortgage yesterday to get into that property. Actually, such a different journey, isn't it? And you do need to be really there for your client in more ways than just, this is your finances. Absolutely have the family been involved. This is a long-term decision. And you find the clients want that time and space, and it's a completely different dynamic, isn't it? If you're nodding.
I was going to say, well, we actually have completely the opposite problem. Because we have one client recently who got her divorce decree. I can't work out the maths, but basically 16 years ago, and she never got round to actually asking for the share. She'd been awarded a share, but it hadn't been implemented. So obviously, by the time we got round to implementing it, and that took 2 years, it had changed hugely from what it had been when the original order was made. And there's another case that, again, you can find these things on the Daily Mail, but there was a gentleman, Mr. Vince, and he married a lady, again, several years ago, and when they were both sort of new age, I use the word hippies, but they basically didn't have a lot of money. They were married for a couple of years. They didn't get a divorce settlement. They didn't formalise it. 16 years later, he founded some sort of eco business and became a millionaire. And she went to court to get some of that money, and she was entitled to it because they hadn't signed it off. So, if 6 months, it can go for years. It really can. So, again, one of the pieces of advice is, try and get it sorted, get it formally sorted, and get it implemented as soon as possible.
Yeah, because that is it's not a nice situation for him to be in. I feel like I need to start reading the Daily Mail now to get used to
Other newspapers are available as well.
I'm learning so much.
And I guess that's where advice is important, because if you're an advisor, they come see an advisor first, either in the equity release space or the financial planning space. You can tell them these stories. Whereas again, it's going back to that, if you don't know what you don't know. And I guess for advisors listening to this, we had an episode that we filmed this morning speaking to a financial planner, and one thing he absolutely said was, know what you're good at. And actually talking about that approach, that it does take longer. You maybe will be at it 7-8 months to find some pensions. Some advisors prefer the quicker stuff, don't they? They prefer getting those journeys on board. And I guess that's where it's lovely that as an industry we're all so different, and we can each go into the area that suits us best and know that we also have connections that are in other areas that suits them as well.
Yes, absolutely. So, for example, if we came across a situation where we needed to sort out some sort of later life loan, we wouldn't do it. At this stage, we would certainly go and speak to somebody else who knew what they were doing. But if what the client is looking for is, how am I going to live in retirement? And that's us. That's our niche.
Yeah, it's with we've talked about it before, customer outcomes, making sure that's in place and avoiding foreseeable harm, all these types of things. The signposting element is so key, isn't it? Look, you were mentioning before, Manjit, about the signposting to different areas, to GPs and to other support elements for customers going forward. It is hugely important nowadays, isn't it? It really, really is.
Even if they are over 55, we say it's never too late to start investing in a pension. to help with if you were to have a situation you can now work until 75. Some people work until 75, 80, they carry on working. So why not contribute at a later stage to help? But again, I would refer them to specialist pension advisors because we don't give that advice in pension area. But again, signposting them to those right professionals who can give you the guidance and look at ways to implement it.
Sorry, I was going to say that does actually bring me to a point that I was trying to remember to say was obviously it's not always the female that is looking to build up pension, but it very often is. And it very often is because she has taken a career break to bring up the family. You're right, it's never too late to start saving into a pension. But what I think a lot of ladies don't realise is that if they don't have a pension when they get divorced, and they say, oh, well, I'd rather have something else. I don't want the pension. What's that thing? It's not very interesting. Not only do they not have a pension, but if they've been out of the workforce for a while, they've got very little opportunity to build up anything like the pension that their husband's at, because they're not going to go into a well-paid job after the career break, and they've got much less time to do it. So it is important, again, when we talk about what an advisor can do, we can say to them, this is actually probably harder to do than some of the other things that you want to tick off on the list. So maybe you should take that pension, even if you're not going to get anything out of it right now. You'll be very glad of it later on.
For the national insurance contributions, isn't it? Because one of my friends, her mum, just put on Twitter recently, or it's not Twitter anymore, X. She got on that recently, and she said, how many years do I need to have paid national insurance contributions for? I'm asking for her mum. And I was able to answer, just told her some brief bits and pieces. And I said, well, why is it? And she's like, well, she's now approaching retirement and really quickly realising that she's not made as many contributions as she should have. And she's trying to work out what to do about this. And it's like, so again, if people have been off work to start a family, and whether that's the man taking time out, as you said, that could be the man staying at home to take time out to look after family, or it could be the female. It's actually having that in the back of your head. It's not just your personal pension, it's actually all your kind of state benefits and things potentially later down, albeit maybe not massive, but it still all adds up, doesn't it? If you're starting from a playing field of having really not very...
It's that opportunity cost, isn't it, that they're not aware of at that point, where you're enlightening them of, well, if you don't take that because it's not the shiny thing that you want, the pension. I mean, if you don't do it, these are the implications, because it's so much tougher for you to build up, as you've already said. Yeah. And they're not going to be aware of that at the point in time, are they? Particularly if they haven't dealt with the finances.
It's a much wider issue in general, as we all know, that people don't generally understand how long it takes and how much they need to fund their own retirement. But if you've got somebody who has never actually, well, not never, but has even been just out of the workforce for a while and not involved in, say, finance, then the problem is compounded, and they just think, oh, I'll get to that at some point, or I won't need it, or I'll live off the state pension. The state pension is actually not very high.
So, well, that's been really insightful. And I think for any advisors, potentially with clients going through divorce or themselves going through divorce, I guess, might have listeners thinking about it now we're in the new year. What would be one tip or bit of advice you would give other advisors in the industry? I'll start with you, Fiona.
Oh, that's putting me on the spot. I think, there are lots of different very useful things, but I would start with, if you're coming across a client who is going through a divorce, try and get to speak to them as soon as possible so you can see if there is scope for you to help them. And the areas to look out for are where you've got a disparity of assets between the couple, and or a disparity of ages. That's another one, because that makes a huge difference in terms of pension provision.
Thank you very much. How about yourself, Manjit?
So the advice that I would give for other advisors is try and have a tailored, sensitive approach to the advice process, because it is a unique situation when you're having a client who's going through divorce, and especially meeting that client need and their concerns. That tailored approach is key, and just making sure you have an open communication with the client and their family, as well as being flexible. So those are top of the crucial elements, I would say, as a providing great advice, especially in the challenging time.
Oh, thank you both so much. That was really, really, really useful, and I think it can probably benefit many. So thank you for spending time with us today. And yeah, for any other advisors looking to find more information, there'll be links within the bio that you can click to find out how Legal & General can help those customers too.
Yeah, thanks so much. What a special. Amazing.
Thank you.
Thank you.